Boom, start recording. Okay, so this is like a psychology workshop slash how you can apply psychology in trading. It's a very vague topic. You know what I mean? This is a very vague topic where people will constantly debate: is it the edge? Is it the psychology? And in my opinion, I don't think it's a debate. I think it's the same question or the same debate of chicken versus the egg, right? The egg can't survive without the chicken. The chicken can't survive without the egg. It's like who knows? Who knows what really came first, and who knows what's really the most important, because they both equally are important and they're symbiotic to each other. So I don't want this to be an either or topic or an either or discussion, but I want to go over the single-handedly, in my opinion, the most important part of trading, right? This is the unsexy stuff and the stuff that people don't find attractive. And this is why the only 10% are profitable and not the 90%. You can always see what gets more attention and more attraction and more clicks and that stuff in social media, right? What is it? The 90% high win rate strategies, the here's trade this and you're going to be profitable tomorrow, that type of stuff. But if you do not understand how to use a tool, okay, if you don't understand how to use a hammer and drive the hammer into, use the hammer to drive the nail, if you're using the handle, right, you're taking an effective tool that has efficiency at what it's supposed to do, but you're not doing it the right way, because what is driving that hammer? It's your mind. Your mind is controlling you to use the hammer. Your mind is controlling you to use the tool. Trading in and of itself, guys, we're not traders. We are risk managers. We're business owners. Trading is no different than building a business. So if you understand that trading is nothing more than building a business, and you also understand that all these different businesses can be profitable, and all of these different businesses have different business models. Amazon's not copying Apple, and Apple's not copying Costco, and Costco's not copying Sam's Club, right? They're all different businesses, some in the same industry niche as others, but they're all having different business models. So it's very laughable when people tell me, Austin, the edge is the most important thing. Yes, objectively, the edge will make you, that's how you're getting the value. But if you don't know how to drive that edge, if you don't know how to use the said edge and be consistent with the edge when you take a loss, when you forward test it, when you're back testing it, if you're not that disciplined to show up every single day, win, loss, or flat, then the edge is rendered useless, because you haven't focused on the actual most unsexy part of this whole thing, which is your psychology, which is the unsexy part, this part that no one wants to focus on. And this is what has led me to where I am today as just a business owner of multiple businesses. I'm a real estate investor from heart. And I'm here to tell you guys what has kept me making money for 5+ years now, just as a business owner, is the unsexy stuff. Investing in dividend producing stocks, I literally just do it every single week. Investing into real estate, I do it as every single time I'm able to take down a property, I take down a property and I do it the most unsexy way possible. I'm not sitting here, always doing all the flashy stuff, because the flashy stuff, it gets clicks, it gets attention, but it doesn't really get money. You are the product, right? When you see all these videos, all this stuff on social media, look at this, 90% win rate strategy here, 100% win rate strategy here. Let's take 50,000 trades in a single day to make 2R. All that stuff sounds great because it's stimulating your mind. But you have to be very conscious, guys. If 90% of the world, you're going into an industry with 90% odds, 90% failure rate. What is causing that 90% failure rate? What is causing that high failure rate to a low barrier to entry industry? It's the mind. It's not the trade. Anybody, if you're watching my screen, anybody can click these two buttons here. Anybody can get on this screen right here and click either of these buttons. If trading is just as simple as clicking buttons, then my grandma can be a trader tomorrow, right? I can teach an infant how to press a button. So it's not about trading. It's not about a singular strategy. No strategy is better than any others, and you will never, ever, ever hear me or anybody on my team, especially the pack traders that's in the group right now, you will never see any of us say, my model is better than yours, or you shouldn't have taken this trade because my model was different. Guys, the beauty of trading, before we get into this, and for those of you just joining, if you guys have any questions at all, because this is also a Q&A, so if you have any questions at all, please drop them in the Trading Circle chat box there, and I'll get to them. If you have any questions of your psychology, if you have any questions of just, are you inconsistent, you're trading, anything that's very specific that you would like me to kind of break down. Again, I'm not giving you specific financial advice or trading advice. Please read the disclaimer in the announcements. Trading is risky, and you can lose everything. But I will give you from my experience what I've done, because I promise you I've experienced all of this stuff. I really have. I've experienced so much, so many different. I've bought signals. I've overtraded. I've revenge traded. I've used 1,000 indicators on my chart. I promise you, if you've done something goofy, I've probably done it 20 times. So do not feel bad or embarrassed of dropping it in the live chat. But going back to this, so trading is a business. Okay, at the end of the day, you are a solo business owner. What is a business supposed to have? If I were to ask every single one of you that's in the chat right now, in the voice chat, I'm sure every single one of you would understand that a business, a small business that just started out, you're not going to be profitable the first 1 to 2 years. I think we can all agree on that, right? You don't have to be a business owner or a CEO to appreciate that. You don't have to be some large statistician. You don't have to be a genius to understand that a business owner is not going to make money on average the first 1 to 2 years. But yet, where the barrier to entry is so low, so many people expect to get rich in the next week, in the next month. They watch a video and think they're going to instantly be profitable in a week. They back test a strategy and they see all this great data, and then they expect to make money tomorrow. Why is that? Because again, that's what the 90% are doing. The 90% are making emotional decisions. The 90% are doing all of the negative things that you're going on the charts versus what the 10% are doing. The 10% are collecting the data. They're analyzing the data. They're seeing trends. They're seeing patterns of whatever the model requires of you on the charts. Anything like that. And then when they trade it, they're not hopping from strategy to strategy when they take a loss, because they know that over time this is going to be in line with the math. They understand when not to trade and not to expose their business to risk. They understand this stuff. So now we're going to get into the business applications of this and the meat and potatoes of this workshop, and that is what makes a successful business. A business model. We can all agree on that, right? Every business has a business model. That is their strategy. Every business has a strategy that makes them money, that keeps them profitable, that keeps them growing. So we have it right here. Value proposition, target market, revenue, expenses. Guys, these are the basic 4 pillars of a successful business model. Now, there's more, but these are the basic 4 levels. Your value proposition as a business, as a trader, is your trading model. Your target market is the instruments that you trade. US 30, NASDAQ, gold, Bitcoin, whatever the instrument that you want to trade. Revenue. That's the profit that you're making from the strategy and the risk management that you're using from strategy. And your expenses, the calculated risk trades that turn into losers, the losing trades that you're still using positive risk management for. A business experiences every single one of these. And without each of these, you do not have a business. And yes, also expenses. You are going to lose trades. You are going to lose trades. You are not here. But what is the 90% doing? The 90%, what are they focusing on? They're focusing on here and they're focusing on here, right? The 90% are focusing on 50% of the actual business model it takes. Now, I were to ask you guys, if you were to go into Shark Tank, I think we all know Shark Tank, the TV show, where you got to brief your business plan to the sharks, right, to get a loan or to boost marketing or whatever it is, right? They're coming in for money in exchange for a market share of their company or cash flow, whatever, right? That's the basic premise of it. If you were to go into Shark Tank or to any investor and to pitch your trading strategy, if you don't have and understand these 4 like the back of your hand, how in the world do you think these people are going to give you money? Do you think the market is going to give you money? So now I want you to look at it like this. The market is your investor. The market is the Shark Tank investor. You're going to these markets every single day if you're the 90%, the unprofitable, and you're just focusing on your strategy because you've seen some fancy 90% win rate strategy on YouTube, and you're focusing on winning every single trade because you have to win. If you lose, you're failure. If you lose, you can't handle it. You're an emotional trader. You're all up in your mind. You can't get out of just understanding that you're going to take losses. because that is what the 90% do. They don't understand that they have to stick to a consistent instrument or instruments if you want to stick to like 1 to 2 to 3 assets, and they don't understand that you're going to have business expenses. They don't focus on these two. Why? Because this is unsexy. This is the stuff that the 90% don't want to focus on. They don't want to talk about their losses. They don't want to post their losses on social media. They don't want to journal their losing trades because it makes them feel inferior. They don't want to just stick to a couple of assets because maybe the asset that they want to stick to didn't present a trade today. So they hop to another asset because they have that need to do a trade. It's just not your day to trade, dude. If you have a strategy on NASDAQ and it just doesn't present, and the one time you hop over to, let's say, US 30, and you then add that strategy to US 30, you changed your entire business model. Can you imagine how funny it would be if Elon Musk said, well, we didn't sell enough Teslas this month. I guess we should start selling scooters. Let's just start selling scooters. The instrument was Teslas. The target market was Tesla, was vehicles. We're now just going to start selling scooters out of nowhere, just left field. He has a market with his shareholders, and they said, and he says, guys, we didn't meet the quota, so we're just going to start selling scooters. Do you know how laughable that would be? But yet, this is what every single person is doing on the charts. Everyone here is guilty of it, including myself. I am not perfect. I am not an expert. I am not a market genius. But what I do know is how to manage my mind and to use my psychology in my favor and to be profitable, because that's what I have been doing. So many people, they get bored. They don't have a trade that day, and they'll hop from instrument to instrument to instrument, and that is just as bad as hopping from strategy. So when you have all four of these aligning, when you have all four of these business model pillars aligning with your trading, what do you get? You get set probabilities, you get math, you get a specific risk management profile, and you understand that if you just stick to this over a long period of time, over the next 100, 200, 300 trades, because guess what the 90% are focusing on? They're focusing on winning the next trade. They're focusing on, dude, I have to win this trade, because if I lose this trade, man, I'm going to be sad. I'm going to be upset. I can't flex it to social media. I can't tell my friends how great of a trader I am. I got to win this trade. Bro, screw that. Who cares? This is a business. The 10% understand that even if they lose a trade or lose a handful of trades, but they have the data because they built a model that has quality data and they're journaling every single trade they take live, they understand that they have a set probability. They understand that they have the math in their favor if they just take that trade over and over and over and over again, over weeks, over months, over quarters. They understand that if they have a specified risk of 1% to make 2% or a 0.5% to make a 2R or whatever the case may be, if you have a specified risk that you're taking every single trade and every single model that you trade, you're going to have all of this. But the moment you alter any of this, the moment you alter your trading model with, maybe your trading model gives you 3 trades a day, and if you lose all 3, you got to move on to the next day, but you make 4 trades. Guess what happens? Your probability goes out the window. Now you've went into think of it like this. You went into another dimension, right? This is your dimension that you're living in now. Now you're hopping dimensions. Now you went to a whole nother set of probabilities. You're exposing your business model to a whole different set of math because you haven't built data out of a model that takes 4 trades a day. You built data around a model, and you've been live trading a model that takes 3 trades a day or 2 trades a day or whatever. This is just an example. This isn't set in stone. And the moment you alter any of this, your probability goes out the window. And guess what happens? Guess what the most common thing I always see traders complain about? They're like, dude, I don't know why I'm so inconsistent. I don't know why I'm inconsistent of everything I do. My P&L looks like this. Their P&Ls, when they pull up their prop firm statements or their broker statements or whatever, looks like this. It's just all over the place. There's no consistency because they're either strategy hopping. One of these 4, if not all of these 4, they're changing every single day, every single week. They're changing their risk. They're changing their targets because they want out of greed or because they need to make up losses that they overtraded on. They're changing their instrument because the instrument that they wanted to trade on wasn't giving them enough trades, and they have this ego, that this complex that they have to constantly trade. They have a different trading model every day of the week because they took a loss here and they had a no trade day there. They made a winning trade and then took a losing trade, and they needed to win again. Like, you know what I mean? There's all these different probabilities. And if your equity curve looks like this, if your trading plan looks like this, if your data looks like this, there is probably an issue here, or it's just not a profitable strategy. But how do you understand this? You got to journal, and we're going to get into that in a little bit. So now, if we can agree, and if I've built the context to you guys that these four things is a business, and the trading that you're doing is a business, then what is this? This right here is why I love trading so much. This little graph right here. This graph is what opened my eyes when I was starting to really dig and research into trading, and I just went all in. Because like I told you guys, I do real estate, right? I create content on YouTube. And this is unlike any other business I have ever learned about, researched about, built myself, whatever. And that's, in the traditional business world, the more revenue that you make, usually, again, I'm generalizing, you be like, well, Austin, what about that one business I seen on Shark Tank that just instantly became profitable? I'm talking about the 90 to 95% of businesses, okay? Not the one-off scenarios. But most of the businesses, the more revenue that you make, the more overhead that you have, right? Because the more products that you sell or the more customers that you get, however the case may be, you're going to have to get employees to start managing that product or managing that service or managing that whatever it is, right? You got to scale the business as your customers scale. You got operational costs, you got product and customer support, you got distribution, you got marketing, and this is just a few of them, right? As your revenue increases, so does your overhead, so does your expenses. Guess what happens in trading? And this should give you guys goosebumps. And if this doesn't give you goosebumps, then maybe trading just isn't for you. All right. And that's another realization that some people just have to have, is that maybe this just isn't for you. In trading, the more capital that you get to trade, aka revenue, the more funding that you get, the more money that you add to your live account, whatever the case may be, you can actually lower your risk. Somebody tell me another business that does this, because if they do, I'm going to quit trading and go to that. Right? Because this is why this makes me so passionate, is this right here. The more capital that you gain, the more funding that you gain, the more that you're trading, the more risk that you're able to expose your business to, you can actually lower your risk and gain more. Why is that? How is that? Because the more funding that you get, the more that you compound in gains, you want to start lowering your risk as a trader. You want to start protecting your upside. But while you're protecting your upside, you can actually still gain more. And this is just a very simple example. But if you get $100K in funding and you're risking 1% to make 2%, which is a very common risk to reward to account size distribution, right? This is a very common prop firm account size, $100,000. This is a very common risk. A lot of people risk 1% to make 2%, 1 to 2 risk to reward ratio. You make $2,000. But as you scale, as you build this solo business, once you get to 1 million in funding, you could only risk 0.25% and still maintain a 1 to 2 risk to reward ratio. And now that gain is $50,000 of 0.25% versus risking 1%. So you can lower your risk dramatically, but increase your revenue. And you're not doing anything. You don't have to hire employees for this. You don't have to hire marketing, or you don't have to get customer support. You are your own person. Every win and loss is is responsible to you, right? You don't have some rogue employee that's going to sue you. You don't have some customer support that's being terrible and it's ruining your conversions of. You don't have some distribution that shut down and now you got to fix and find a way to distribute your product or whatever. Your website goes down. You don't need none of that. Your overhead stays the same, if not lowers. I have not found any other business that operates this way, that you can still make consistent returns over consistent risk. I haven't found a single one. And if you can respect this, if you can understand and respect that this is a business, if you can understand and respect that this is unlike and unique to anything else, why are people still doing this? Why are people still, and this just drives my point home, that this is why psychology is the most important above an edge, because you can't even get the profitability of an edge. You cannot even realize a single dollar from a trading strategy if you're doing this, if you're doing this nonsense right here, gratification of results versus gratification of a rule. You as a trader, the 10%, they have gratification over every single day, rinsing and repeating the strategy that they took a lot of time to build. Just like every single one of you, I'm sure every single one of you, especially if you're here and you want to learn trading and become a professional trader, if you're here to do that, I'm sure every single one of you has took hours and hours of back testing of a strategy. I'm sure every single one of you have done that, because we all love to do that, right? That's the sexy part. That's the fun part. But what's the unsexy part? What's the part that no one likes to do? Journal, right? And I told you guys we were going to get into that in a little bit. Journaling is something that everyone hates to do, but it is one of the most necessary things that you need to understand. Because people are out here trading, and I'm sure there's at least one of you all in the voice chat right now, and I'm not picking on anyone, but I'm sure there's at least one person in here right now that has conducted a trade today or taken a trade and they have not journaled it. They have made the conscious decision not to journal. And I would ask you why. Because if we understand that this is nothing more than a business, if we understand that this right here has to be respected as a business to get this set probability, how can you understand if you're operating profitably as a business if you're not managing your profit and losses? AKA, if you're not understanding the model, which is what we talked about right here, if you don't understand if your model, what's the operating expenses of your model, of your value proposition, right? Because do you think Amazon, Tesla, Facebook, do you think all these businesses just every single month, month over month, always make money? I'm sure some, especially in the starting stages, I'm sure there was months they all went red. Every business experiences red months, red weeks, red days. So again, I would ask you, why are you not journaling? Why? Because it's not sexy, right? It's not fun to do. Nothing that is worth it is going to be fun. It's not supposed to. That's why it's worth it. Everything that you go through that's painful, what happens? You usually grow exponentially from it than if something was handed to you. If I gave every single one of you $10 right now, would you respect that $10? Or would you look at it, and I know you guys are probably going to think of this, right? Oh man, what was that thing I was wanting to buy impulsively, and now I can do that? You wouldn't respect it, right? But if something came up and you were like, you had to pay $10 for it, you'd be like, dang, I don't want to spend $10. But if I gave you $10, you'd be like, okay, I can go pay for it now, because you're not respecting it the same. So everything that's hard is worth doing. Everything that's unsexy is worth doing. That's why you have to do this unsexy stuff. I hear this all the time. I don't know why I keep doing this. I don't know why I'm over trading. I don't know why I'm revenge trading. I don't know why I keep hopping from strategy to strategy. I don't know why I'm doing an insert, bad trading habit there. Because you're not journaling. Do you think that a scientist, if they were conducting an experiment, if they just magically were just like, you know what? I did this experiment, but I don't know why I did that. I keep doing this over and over and over again. I don't know why. And then the scientist next to him say, well, what does your data say? What does your journal say that you recorded all these experiments? I don't know. You know what I mean? Like what? It's laughable, right? But us as traders, because the barrier to entry again is so low, anybody can start trading. If you got a $50, you can pay for a prop firm account and start trading today. The barrier to entry is so low that we expect it to just be magically easy, that we don't have to do all this. That's why the ratio of anything that is the barrier to entry is very low. The failure rate is usually very high. It's inverse. And usually if the barrier to entry is very high, the failure rate is very low. Because what do you hear about when it comes to institutional investing, right? You got to be an institutional investor to invest in real estate and this property and this property and this property. That's because these people have already went through it. They've built their wealth and now they open themselves up to another different types of ways of investing. And the failure rate's usually not as low. It's just a way to diversify your wealth, not really to build it. It's because they've already been there. So in trading, the barrier to entry is so low. So you as a trader, you should be doing what the 10% are doing, not the 90%. I keep over trading because you either lost a trade or won a trade. Most likely you have greed. You're lacking confidence because you're not journaling, because you don't have confidence from the journal. You're doing that you can consistently do this. You lack the confidence that, okay, I won this trade, but can I do this again? I think I have to overtrade because I don't know if this actually is going to work next time. Why? Because you're not journaling. You haven't built a pattern. You haven't built a model that you understand can be replicated week over week over week over week. I don't have time. I hear this all the time. You know what I hear when I see this? When I hear this? When I see people say they don't have time journaling, you don't have time for your business. That's all I see when people tell me that. Guys, I have people in my trade group, full-time business owners, 9-to-5 truck drivers, active duty service members in the military. I have people that are students. I have people that are in high school, in college. I have people from different time zones that are staying up super late. Dude, you cannot tell me you do not have enough time. What you're actually telling me is you're not making it a priority. Everyone has a spare 5 to 10 minutes to 15 minutes a day. Everyone can, as they're looking at the charts, make a little annotation on their chart and be like, okay, I wanted to overtrade right here. I'm going to annotate this for later. Everyone can do that, but that's not sexy, right? That's not fun to do. That's why people don't do it. So this right here, if you're, and I know there's at least one person in here that when I said this, they felt personally attacked, all right? And again, I'm not trying to personally attack anyone. I promise you I'm not. I'm here to not sugarcoat things, to tell you guys what you need to hear, all right? So if you say you don't have time to journal, again, all you're telling me is you do not have time for your business. And say that to yourself. Be real with yourself. Because I'm telling you, 99% of these habits, these bad habits that can be solved, they're stemmed from laziness. They're stemmed from people that truly do not really want it. I keep strategy hopping. Have you built data on the model to give you confidence that you don't need to hop from strategy to strategy? Guys, I took a loss today. How many people on social media would show you this? They're sitting here teaching a workshop and took a red day. I took a red day today. This was a losing trade. Does that mean that I'm a bad trader? Does that mean that I'm a failure? No, absolutely not. I took a loss. Every model takes losses. I managed my risk. I said, okay, today's a red day, and it's time for me just to call it quits. It is not a day for me to extract value from the markets, and that's fine. That's fine for me. I practiced risk management. Today was a risk management day, not a green day. That's it. Are you journaling? Are you keeping a journal of all your trades to build confidence? This is a big one. My confidence, people will ask me like, Austin, how are you? Like, you're in drawdown, dude. Why are you still confident in that trade? Like, because I've seen this happen over and over again. How do I see this happen over again? Not only is my experience on the chart, but I've journaled it. Because every single week at the end of the week, I review my journal and I see, okay, well, the math is still on my side. I don't care. It's just another trade. Are you trying to get instant results? That's another reason why people strategy hop all the time. They're changing model to model to model because they're just trying to win. They're just trying to flex. They're trying to build their ego. They're doing, again, what the 90% are doing. You don't have time for your business. That's all that this means. If you're not actively trying to solve this through journaling, you don't have time for your business because you're focusing on the results and not focusing on the rules. I told somebody this one time and their mind was absolutely blown. They said, well, of course I'm trading for money. Of course I'm sitting here learning how to trade for money. No, you're not. You're trading to follow your rules. The money is the side effect from following your rules. But if you have absolutely no rules, if you can't follow your rules, if you keep revenge trading and over trading, then how in the world do you expect to even get the results? You're too focused on the results and not about the plan that it takes to get the results. That's all you're doing. And that's what, again, the 90% are doing. The 90% are results driven. The 10% are rules driven. Very simply put. And if you don't believe me, these are some just, you know what's sad? So I hopped in a few different trading discords and prop firm discords. This is just today. These are just a few. This took me about 15 minutes before this workshop. Just today, messages that I screenshotted from trade. People are doing this, and they're still trading. They're still making business decisions on the charts and asking these types of questions in the Discord. I've tried and feel like I've got worse. Over the past week, I've put 250 and lost it all. Put another 250 and now I'm at 150. Baby money, but I'm just trying to ladder challenge my way up. Again, we can all sit here and laugh, but people are doing this, and I'm sure every single one of you are probably guilty at some point in your trading journey, including myself. I am not perfect, or you're still doing this. If you're watching the recording or if you're here live, you're still doing this. You're adding to losing trades. You're just trading to trade. You're just trading to make money. You're just trading to win. Well, like, what happens? I tell people this all the time. Let's just say you do win. Let's just say, congratulations, you did just double. This person put 250 and they doubled it to 500. Is that the foundation you want to build? What happens if you're in a prop challenge and you do pass it out of really bad risk management? You're just gambling. Do you want to have $100,000 of capital that you can make a decent return on and have that weak foundation? You're going to lose it, right? Do you want to go into a driving challenge? Do you want to go into a driver's test and learn how to drive the vehicle as you're in a driving test? Because that's what every single person that's doing this type of nonsense, that's what you guys are doing. You guys don't want to do the unsexy long path. What you want to do is you want to learn how to drive the vehicle when you get into the vehicle with the driver, with the examiner, right? They're like, all right, click your left blinker. And you're like, okay, where's the left blinker? Where's my blinkers at? How do I make it turn left? You're hoping to learn how to drive the car as you're being tested. You're hoping to make money. You're hoping to pass the challenge as you're being tested on the challenge. As you're being tested in the live markets. Do you do any signals? I'm trying to pass my evaluation so I can start working on a payout. Guys, this is today. I can't make this up. I will not expose who these people are, but this is today. I just hopped around from Discord to Discord to Discord to give you guys examples, if you don't believe me, on why psychology is the most important part of trading. This is it right here. I'm trying to pass my eval so I can start working on a payout. Guys, these payouts, again, you're focusing on results. You're focusing on just the gratification of getting a payout. What happens if you do get a payout? Congratulations, you get a payout. Do you think you're going to consistently get payouts from trading, from signals, from just blindly trading? Guys, we're building a business. You're learning a skill that no one can take away from you. And that is why trading is so beautiful, is because you don't have to rely on anyone. If prop firm XYZ goes down tomorrow, you have a skill that you can transfer to another prop firm, that you can trade live capital. If all prop firms just cease to exist, you are building a skill that you can only grow from. Show me any other industry that can do that, where people go to college for 4+ years, spend exuberant amounts of money, get into all this crazy debt to not make a single dollar, yet people want to go into these trading industries to trade and expect to make money in their first day of trading, their first week of trading, their first year of trading. They expect to make a dollar. But if you treat this like a business, if you understand that it takes 1 to 2 to 3 years to really start getting that compound going, that learning curve grow, and it could take you sooner. That's just an average time frame. I mean, everyone learns at different paces and puts, energy. Like, I'm telling you guys right now, when I get obsessed with something, I'll put in 10+ hours a day, right? So my day versus somebody else that just kind of wants it, right? But let's do that for a week. We both still say, yeah, we've been doing XYZ for a week, but I'm telling you right now, I will put in 10 times more effort than what that person is going to do in that same week. So it's also about the quantity of time, not just, or the quality of time, not just the quantity of time. So people learn at different speeds. But the point being is, if you really treat this like a business, you can be set up and consistently grow and be even better than a person with a 4-year degree that's expecting to get a set salary. That kind of rhymed. I should make a rap. I'm trying to take a trade, but I can't understand MT5. You all know you've seen it. You know you've seen this. How do I do MT5? How do I operate MT5? Y'all, people are trying to take business decisions when they don't even understand the tool of how to execute said business decision. How do you get alerts? Where can I learn everything about trading? Guys, I can't make this up. I literally seen this in a Discord. Where can I learn everything about trading? What's the second best? This one right here gets so many people. What's the best time frame? What's the best asset to trade? What's the best strategy? I'm here to tell you guys right now, there is very few certainties in trading. This is one of them. There's no best. There's no best anything. There's no best time frame. There's no best strategy. It's all relative. It is all relative to how much time can you spend on the chart per day? Where's your time zone? What asset is more effective with your risk? Like, all of these things. There is no best. There's only your best. There is no general best. There is I see Alex. I'm just gonna see Alex is in here. Alex T-Doc. There's only what's best for Alex. What Alex may want may be different than what I want. I'm in the Eastern Standard Time Zone. I trading NASDAQ and US 30 fit my risk profile the best and my psychology the best. And I like the way it moves, and I've developed a model around the way it moves. But maybe Alex, maybe he's in another time zone, and maybe he likes to trade a little bit more slower, and he may choose a Forex pair, right? But it's all relative. There is no best anything. I see so many people, they'll try to trade the way some famous influencer tries to trade, or somebody on social media tries to trade, and they say that's the best, but it's not the best for them. And they're sitting here still wondering why they're not making money. They're like, dude, I'm doing the same exact thing this guy's doing, but I'm so stressed out, and they sound like they're on a vacation right now. Why is that? Because it's not clicking with your brain. Because trading is not an if-then statement. It's not black and white. There's a lot of gray. Trading is like vehicles. Okay, I can be a car person. Alex can be a truck person. Canny can be a motorcycle person. Cyril can be a boat person. Everyone could have their own vehicle of choice, but they still do the same job. They get you from point A to point B. There's no best. Yeah, we can all go into the semantics, right, of, oh, what has the better gas mileage? What has, but it's all, the goal is still the same. I promise, if you stay consistent and go from point A to point B and stay safe doing it using good risk management, that vehicle is going to get you to your end destination. It's the same thing with trading. If you might get a few bumps in the road. You may get a flat tire. You may even get into an accident, right? But there's expenses to be paid. But if you use good risk management, you're going to live to see another day. You're going to live to trade another day. This is my first time trading gold. Since I've stopped for about a year, I forgot how it be moving. Like, people do this, again, all the time. They just hop to a they just hop to an instrument. They're just like, yeah, gold looks like it's moving today. I'm going to hop and trade gold. It looks like market's close today. I think I'm just going to try to trade some Bitcoin because I'm bored. Yeah, well, Bitcoin's chopping around. I may trade NASDAQ. If you mess with your instruments, what happens? That's part of your business model. If you mess with your business model, what happens? Your probability, your math, and your specific risk goes out the window. You go into a whole nother dimension of probability. So do I have any questions at all from any of this? And again, any concerns that you go through, please, no one is going to make fun of you here. And if they do, I will roast them to oblivion. Anybody have any questions, concerns, things that they have issues with? Cyril says, you never answered my first question. Let me see. I see you guys chatting in the... What's your favorite candy? Is it still Idaho Spud Bar? Yeah, Idaho Spud Bars are pretty dope. Salty. I remember the little cells, the stop loss prevents significant loss, and then your stop loss is your insurance fund, right? Just like how you're going to have reserves as a business, so that way if you operate at a negative cash flow for a month, you got that cash flow to be your stop loss as a business. 90% focuses on losses instead of the lesson. Exactly. Yep. Not journaling your trades is like tracking items is like not tracking the items sold in the business. How funny would it be if you as a trader or you as a business owner would not tell your cashier, if you had an employee, to count the money in the cashier at the end of every single night, right? That's a very common thing that you do when you work a job that involves having a cashier or yeah, like counting how much you got at the end of the day. You guys are not doing that every single day that you're trading. But we would laugh at that as a business, but we think that that's just, something we can optionally do as a trader. How are you supposed to know what items sell and work, what times are a waste of energy and money if you aren't? Yeah, exactly. Guilty. Still not started it yet. Starting next week. This week was finding my feet in the groove. That's right. That's right. Once you start executing trades, there you go. I took the last one time off. All right, guys. Well, if you have any questions that you just think about randomly, feel free to tag me in the Discord. This about wraps up the workshop. I'm going to post the recording on my YouTube channel. If you guys want to rewatch this, take notes, re-listen to it, or if you just hopped in here, I've seen we got some new faces that hopped in at the end. Um, if you think of anything like that. But I hope you guys got value from this. If you guys do, I see there's a pretty decent amount in the voice chat. If you guys got value from this, let me know in the chat if you would like to do this more. I could do this irregularly and with different topics about psychology and stuff. And yeah, I'll happily do this. And again, I'll post this on YouTube later. So if you know a friend that is struggling at trading, if you have a trading friend out there that's like, dude, I don't know, like they're being sus on the charts, share them this video, this recording. And I just want to leave a legacy in trading. That's my main goal here is I want to build something